Most people think of successful traders like they think of Olympic athletes, like some elite breed of superhumans who have trained for decades just to reach that one perfect moment. But this really doesn't reflect reality. In trading, someone with absolutely zero experience can stumble into a winning trade. In the Olympics, that's impossible. You're not going to walk in off the street and throw a javelin like a pro, or make a 2-meter high jump, or run a 4-minute mile. In trading though, one click, one trade, sprinkle some leverage, and boom, you can have a life-changing profit. The bar to enter is incredibly low. The problem is, so is the bar to lose everything. The art of successful trading is very subtle. It's not something that's taught in schools, and it's not something that's precisely measurable. This is why 90% of people who try to trade actually fail and lose money. But it's also the reason why the 10% that do find success in trading can come from all sorts of different backgrounds. I've seen people from all kinds of different backgrounds and with all kinds of different personalities become successful traders. Whether you're young or old, rich or poor, smart or clueless, anybody can find success in trading. And given that you've clicked on this video, this is probably something that you're interested in. I'm Peter, the co-founder of BraavosResearch.com. I've been trading full-time for over a decade, and what started as a system that I built for myself now helps thousands of traders become profitable in the market. I publish a newsletter that hundreds of institutional clients read every week, and I also built the largest investment research brand on YouTube. And in the next 15 minutes, I'm going to be sharing with you the insights that I found truly make traders succeed in the market. We're going to start by looking at the typical journey of a successful trader, the most common deadly mistake that traders make that stops them from being profitable, and finally, the 2 absolutely essential ingredients to profitable trading. I began trading when I was 16, and I stumbled upon pretty much every obstacle that you can go through when it comes to financial markets. Whether that be mistakes in the instruments that I was trading with, my poor trading mindset, my lack of knowledge leading to stupid mistakes, complacency, fear, the whole thing. You could say that I started out as an extremely unprofitable trader, but I did keep on going, and I think that's the typical path for successful traders. They start out unprofitable. Naturally profitable traders are extremely rare unless you have some kind of mentor or guidance to help you avoid the mistakes that 99.9% of people will make. So if you're not profitable right now, let me start by reassuring you that almost all successful traders start out exactly where you are right now. Everyone needs to go through a journey of improvement on their knowledge, but also on their trading mindset, because the mindset that you have when it comes to making trading decisions is just as important as the knowledge that you have on financial markets. So now on to the next part of this video. The most common deadly mistake that traders make is thinking that they are investing. The actual difference between trading and investing is very difficult to point out. Many people believe it has something to do with the investment horizon, that if you're making shorter term transactions, that those should be considered trades, whereas longer term transactions should be considered investing. However, if you ask Warren Buffett, he's going to tell you that the only true kind of investing is value investing, which means that you're buying great businesses at a discounted price, and that anything that's not value investing should be considered trading or speculating. And I think that is the correct way of looking at it, because in order to be successful in markets, you need to be fully aware that what you are doing is a form of speculation. Thinking that it's not speculation will lead you to make poor decisions. One of the cornerstones of successful trading is being able to cut your loss when a setup is not playing out. If you strip your ego away and accept that you are speculating, this is not something that will be very difficult to do. But if you convince yourself that you are investing instead of trading, the odds are that you won't cut your loss and that you'll hang on to your position even if the initial setup that you were looking at is no longer in place. We are professional market speculators. Now, it's important to understand that this approach takes work and requires active management. Just like active value investing requires work and active management. For those willing to put in the effort, this is a path to achieving truly superior market returns. Now, some of our speculations will be longer term in nature based on broader underlying economic or societal trends, what many would consider investments, but they remain a form of speculation. And some of these will be shorter term in nature based on temporary market dislocations or a price pattern that we've identified, what many would consider trades. And some will be a mix of both, where, for example, we leverage economic trends and great technical patterns in order to increase our odds of success. So now that we've covered the foundation of what we are actually doing, we can look at the two essential ingredients to successful trading. This is the part of the video where you're going to get about a decade worth of trading experience in under 10 minutes. Number one, you need an edge that lets you beat the house. This is a term that's used in casinos when you have a way to make money off the casino, instead of the casino making money off you. Now, some traders just use one particular edge and use it over and over again. Some traders, like ourselves, know that there's many different ways of having an edge on the market, many different ways to beat the house when it comes to financial markets. And so you'll probably find that on our website, we have a huge variety of different types of trades. All of them have a particular edge. The second big concept behind our philosophy is that we need the correct mindset to implement our edge in the right manner to reap consistent rewards. So both having a great edge and having the right mindset is quite hard to achieve, hence the reason why most traders fail to become profitable. But once you do manage to master both of these concepts, trading becomes easy and satisfying and even unstressful. A lot of people try to say trading is very stressful. It's only stressful if you don't know what you're doing. If you know what you're doing in trading, it really shouldn't be stressful. It should just become an extension of who you are. Now, I also strongly believe that anybody who is open to self-improvement and changing the way they think about trading can be a very successful trader. But like anything difficult in life, it takes time, persistence, and hard work. So what is our edge? As I mentioned earlier, there's a countless number of ways for us to gain an edge on the market. For example, we understand the business cycle very well. We know which assets perform well in each phase of the business cycle, which helps us already put the odds in our favor if we're able to pinpoint where we are in the business cycle correctly. Technical analysis is also a big part of our edge. We focus on price patterns, technical structures that, if used correctly, deliver great results. This framework of combining macro and technical analysis is what provides our edge. It's what allows us to make sure that our potential reward on each trade is greater than the amount of capital that we are risking. Let me give you a quick example of a price pattern that we used to our advantage on gold prices in 2024. Between August of 2020 and early 2024, gold prices were in a kind of consolidation range. But this wasn't just any type of consolidation range. This was quite a typical bullish basing pattern in technical analysis. And the measured target of this pattern was $2,700 on gold. So from the moment that gold started to break out, we were very exposed to the gold trade, and that allowed us to capture the big meat of the move up that occurred in gold prices in 2024 in a very short amount of time. The potential reward was a 33% move up in gold's price, and the potential risk was around a 5% loss. Now, we also had fundamental reasoning and business cycle reasoning for being optimistic on gold, but this price pattern is what allowed us to capture this large reward over a short time period. So what about our mindset? Adopting the right mindset is crucial to being a successful trader. Even the greatest strategists that have the most in-depth knowledge of how markets operate can be unprofitable if he lets his emotions dictate his decision in trading. I've worked with many equity strategists that had a very impressive backgrounds on Wall Street that were supposed to be financial market gurus. And indeed, they had a huge amount of knowledge regarding markets, but in reality, they were incredibly unprofitable. In fact, I would go as far as say that the vast majority of analysts on Wall Street that you hear about are likely unprofitable. Do they know a whole lot about markets? Absolutely. They'll draw all sorts of lines, all sorts of complicated calculations, deep dives into data, but are they actually profitable? Usually, no. And the moment that I figured that out, I understood that the mindset that you have when it comes to trading, that the psychology behind trading is just as important as all of the knowledge and analysis that you can apply to trading. And most research firms or trading services don't acknowledge this absolutely massive pillar of successful trading. And by not doing so, they're really harming their clients more than anything, because they give their clients the illusion that because they're buying great research, that they don't need to be managing their risk, that they don't need consistency, that they don't need the mindset that's required to be a profitable trader. Or even worse, that just because there's a whole bunch of complicated calculations, somehow it gives a guarantee that a trade is going to be profitable. And this is something I say in almost all of the videos that we post on our website. There is no such thing as a guarantee in financial markets. Absolutely no such thing. All of it is probability. The only guarantee that you can have, if you put the odds in your favor for every single one, you're going to come out on top. Now, I won't be able to go into the details of exactly how to adopt the right mindset in this video, but I can give you the big principles. First of all, understand that no amount of analysis or knowledge in the world will prevent you from making losing trades from time to time. As I said, there's no such thing as a guarantee in trading. The sooner you start accepting that losing trades are part of the process of being profitable is essential. You have to be able to lose money from time to time in order to be consistently profitable. Accepting this reality will let you manage your risk more effectively. Take pride in cutting your losses. It doesn't matter if the trade immediately snaps back in the right direction after you did it. That might be frustrating, but it's more important that you cut your losses effectively. You'll always be able to adapt how you are cutting your losses in the future. Second big point, do not believe that the market is working against you, and don't expect anything from the market. This is a very common mistake from traders that feel like they have some kind of relationship with the market. That in order to be successful, that the market needs to give you something. And if you are unsuccessful, it means that the market is somehow working against you. This is a very poor mindset to have. The right mindset to have is that the market really doesn't care about you, and that's the truth. The market will do what the market will do. And having that degree of detachment, it will allow you to make better decisions that are separated from your ego that wants to be right about a trade. Trading is about detaching your ego from the decisions that you're making. The third big point when it comes to mindset is do not fall for your confirmation bias. For example, if you're experiencing a loss on a trade, you're going to look for reasons to believe that things will turn around. You're going to dive into indicators that you've never used before. You're going to read reports from places that you've never heard of before. And you're going to steer away from your initial strategy just in order to avoid facing the reality of your losing trade. Whether that's because you can't accept the financial loss, because you didn't really truly understand the risk going into that trade, or because you can't accept the fact that you were just not right about that trade. And so that confirmation bias will prevent you from cutting that loss effectively. Now, this is just one example of how confirmation bias can work against you, but there's plenty of other ways that it can prevent you from making the right decisions. Now, again, I personally fell for all of these traps in one way or another, and what got me to having a better mindset when it comes to trading was a lot of mistakes and a lot of financial pain. Most successful traders need to go through that kind of pain in order to achieve the right mindset that's needed to make money from markets. The only alternative to that is to have somebody that takes you through all of these concepts before the mistakes are made. And again, this is why Braavos exists. So Braavos research exists in order to take people through that journey in a way that fast tracks you towards success. For those of you that are just starting out, making sure that you're not losing all of your holdings, that you're managing your risk properly, and that you're heading towards profitability. And for those of you who already have found a way to be profitable, that you increase your profitability with our service. We work on this mission every day to make sure that we're having the greatest net positive impact possible on as many people as possible. We have two flagship offerings at Braavos Research. The first one is our trading strategy. Here we reveal everything that we're doing on the market day by day, what data we're paying attention to, what setups we're watching, and what strategy we're putting in place. But more importantly, we show you exactly what trades we're taking. We send our clients a buy alert as soon as we initiate a trade, we provide step-by-step updates on the trades that we initiate, and we send sell alerts whenever we exit those positions, whether that is at a profit or if we're cutting our loss. We pride ourselves on the transparency of our track record. We publish every single one of our closed trades on our website homepage that you'll be able to see by clicking on the link down below. Our estimate is that in order for our service to really be worth the cost, you would need a starting capital of at least $5,000. If your starting capital is below that, I still think you can gain a lot from the insights that we share about markets and trading, but it's probably going to be more difficult for you to compensate for the cost of your membership. Now, we priced our membership in order for it to be affordable to a maximum number of people because we strongly believe in making trading more accessible to people. We're providing the service that we would have wanted when starting out trading, a service that would have skipped straight to the part where we start winning on a consistent basis instead of losing. And it just doesn't make sense for us that this service would only be accessible to people with a large starting capital. Now, I might be biased, but I truly think anybody who is interested in trading should be subscribed to our first offering. We just provide so much value in it for the money that we're asking. So if you're ready to get started, you can click on the link in the description down below and join the thousands of traders that are already taking advantage of our service. Now, we do have a second, slightly more pricey offering at Braavos Research. This is our mentorship program, where we guide our clients step by step. We evaluate exactly where they stand in their trading or investing journey. We get to know their strengths, their weaknesses, and exactly what they need to be working on and how we can help them on how to become more profitable. This is a service that is designed not just for traders, but for anyone involved in financial markets. So whether you are a day trader, a technology growth investor, a Buffett-style value investor, we adapt to your style and your preferences, and we make sure that you're heading in the right direction. We stay in constant communication with our mentorship clients, answering any questions that they have at any point. We can help with things like long-term portfolio construction, the development of better trading strategies, scanning the right trade setups for them across financial markets. But also for those who are interested, we can scan for investment ideas in sectors or certain markets that you might like that we believe are trading at a discounted price. We also provide exclusive education to these clients so that they're learning the ins and outs of trading and investing along the way. And we also have exclusive live question and answer sessions with our mentorship clients. As you can imagine, this is a very premium service that's a little bit more expensive, and we also can't have an unlimited number of clients because we really want to provide a VIP experience to the clients that we do have. So if you are interested, we have a separate link in the description down below where you can apply to our mentorship, and we'll get back to you as soon as a spot opens up. Our mission is to help as many individual investors be profitable in financial markets and finally stick it to Wall Street for good. So join the movement with us at braavosresearch.com.